Good afternoon. We are on an extended hour this afternoon for Tampa Home Talk. So we are very happy that you're sticking around to listen to us. And thanks for the extra hour, Lola. Appreciate it. This is your host, Katrina Madewell. And this is Tampa Home Talk on the Real Estate Radio Network. So we're going to continue our conversation here with Paula Blanda, the insurance lady.
Oh, the insurance lady here. Hey, let's get people jazzed about their insurance. Everybody hates it. We're going to make you love it.
Well, you make it fun.
Did you know that on your insurance policy, you have loss of use coverage? And I think Ted can talk about that a little bit.
Before we get into that, I want to give out the studio call-in number since we are live right now. So you can call in and we'll have Paula, the insurance lady, and Ted, the adjuster, answer your questions. 727-441-3000. So I know you have that Bernie insurance question. We've talked about a lot of fun stuff. Take this number. I'm going to give it a couple times. 727-441-3000. Paula, the insurance lady, Ted, the adjuster. We're ready for your questions.
Hey, let's talk about loss of use coverage.
One more time. 727-441-3000.
You got it. Call us.
Go ahead.
Let's say you've had a little kitchen fire. Your house is filled with smoke. I know they talked about a fire earlier with the commercial insurance. You can't stay in your house. What are you going to do? Go stay in a motel. Maybe you have to buy dinner. Maybe even get some clothes to wear on your back. You do have loss of use coverage in your homeowner policy that will help cover you for those expenses. And Ted, tell me what you've seen in your years with the loss of use with folks.
Well, a lot of people don't seem to understand that when they do incur those expenses, they got to keep their receipts. You know, insurance companies, unfortunately, are a bunch of doubting Thomases. They want everything laid out for them so they can see exactly what the cost was that you've incurred.
Sure.
And then it depends.
So I'll give you a tip for receipts. And we've mentioned this on several of our shows at Tampa Home Talk. What I do personally, lifesaver, well worth the small fee I pay. I work with a company called shoeboxed.com. They send this magic blue envelope every month. We stick all the receipts. My family's trained now. We have this box where the envelope is in. Everybody sticks the receipts in there. We ship them off. Everything gets stored digitally. So if I need to prepare that or pull it later for somebody like you,
yes,
I have it available at my disposal, and I don't have to file and keep and store and worry about those thermal receipts in the attic fading because it's hot, all that crazy stuff.
Yes.
And we always tell people too, it's documentation. The more documentation you can give us, the faster we can get your claim settled, and the faster we can reimburse you for whatever costs that you've incurred.
Oh yes.
So
yes. Loss of use.
Do you get 100% if I have my receipt? Is that how it works, or is there deductible?
Well, pretty much up to the limit that your policy will actually pay, depending on how big of a claim you might have. There are limits on the amount of coverage that you do have.
So what kind of crazy things are you guys seeing this week? I mean, that social media thing.
Social media, isn't that wild? Wild? Oh my gosh.
But like you said, unfortunately, I think there's more to come. It affects homeowners' premiums, so we're not encouraging you guys.
And it was interesting, too, when Lori called in, identity theft is huge in Florida. Right now in Florida, identity theft is the #1 claim with homeowners in Florida. Nationwide, and Ted might speak on this, too, nationwide, the #1 claim is dog bites. #1 dog that bites is the Chihuahua.
Oh, my gosh.
Which, by the way, I have 2.
Oh.
Okay, so, the insurance companies don't like the aggressive breeds, right?
Right, that's right.
So if you have a Rottie or a Pit Bull or a German Shepherd, what else is on that list?
And that can vary from company to company or carrier to carrier, but the two that are pretty much on everyone's list are the Rottweilers and Pit Bulls. And on that note, on many homeowner policies in your liability portion that we're talking about, some of them specifically exclude or specifically do not cover animal liability. If you guys do have dogs at the house and you're concerned about that, review that with your agent. You may or may not have animal liability with your policy. In some cases, you can pay $25 a year and add some animal liability back on.
It's interesting, Paula, because we were talking the last hour about insurance and reviewing it every year when it comes up, doing that annual review, because things change for everybody every year.
Oh my gosh, yes.
But what about people that don't do the annual review and they're just paying their insurance? They may have had the same company for 15 years.
Sure.
So, you do that initial application where you're saying, yeah, I have 2 dogs or whatever, but stuff changes and you're house sitting and somebody left their dog, or you rescued a stray or whatever.
Exactly. And a common thing we see, people that do upgrades to their homes, they might do some major remodeling, add on a room, they put in the pool with the screen enclosure, and they don't even think about calling their agent to upgrade and enhance their policy. So,
well, you were talking about the dog stuff specifically.
Yes.
Like, what happens if you get one of those aggressive breeds that you didn't have? Like, is insurance going to cover that?
That can get very complicated. That can be because they are to disclose the animals they have. And on that note, too, some insurance carriers don't like any exotic animals. If you pick up a Burmese python, Any type of exotic pets, some companies don't like that at all. You do want full disclosure with your insurance. So if you guys have anything like that going on at the house, please review with your agent. Another common
Do you
thing
have
now.
companies that are even insuring that? Because I saw
Yes.
something a while back that for renters, they had protection against the aggressive breed. You could get a renter's policy
Yes,
for your
yes.
aggressive breed. But what about the homeowners? Because I don't think they don't cover them, do they?
It can all depend on where your home is located and the company you're with. It does vary, but that is something to ask your agent about. And another thing that's very common right now with homeowners are people telecommuting and working from their home. Do they have equipment at the house? Would that be covered? Does a client come to their house? Those are things that are getting more and more in the forefront with so many folks telecommunicating out of their home.
No,
and
you
working from the house.
can work from home, like paperwork and that kind of stuff. But as long as you don't have people there, it shouldn't really affect you, right? Other than
That
equipment.
can depend on your carrier. For example, some of our companies, if they find out you're working at home, they want you to sign a notarized form that asks specific questions. Do you have clients come? How much equipment do you have? So it can vary from company to company, but we want you to disclose that. Most of them, though, don't have a problem if you have no clients coming to the house when you're sitting there at a computer making sales calls or what have
Yeah,
you.
because they got to evaluate the risk and the exposure because that's going to affect your premium.
Exactly. Exactly. But just another thing to be cognizant of, folks, if you are working out of the home.
That's the thing, and more companies we're seeing do that. Like a lot of corporations are offering those work from home.
So many people all day long. And what can happen, and Ted might be able to speak on this. Let's say you had $10,000 of your company equipment at your home. House burns down. They're not going to cover that on your homeowner policy because they consider it business equipment. That would be insured under your business coverage. So you might be lacking some coverage if you do have a lot of equipment at the house.
And what happens too, invariably, most people don't have a clue as to what is or is not covered under their policy. If you ask them, have you read your insurance policy? No. I went to my agent.
I've never read that in my life. I've been a homeowner for years. I have never read that.
All they
I'm
really-
just being
That's what your
honest.
agent's for. That's what your agent's for,
Right.
though.
All they really care about when they go to the agent is, do I have coverage and what's it going to cost me?
Yep.
Yeah.
How does this affect me? What's the worst case scenario?
And then the bad thing comes when I, as the adjuster, show up and I got to give them the bad news and tell them, sorry, but based on the coverage that you have, this unfortunately is not covered.
How does that work in our prior examples that we were speaking about where people have that at-home equipment or whatever and it's in there but they didn't tell the agent, or they have the aggressive breed, maybe they got the dog after they did the insurance policy.
Sure.
It happens all the time, I'm sure.
Sure.
How does that work for your end when you're going out there to adjust that claim? And
It's going to be predicated on the different insurance companies. Some will say that you have to let us know when you get that animal. It's kind of like an auto policy. You have to let us know when you add a new car or when you add a new driver. Other insurance companies say no, it's excluded on the policy, and until it comes up time for renewal and you change it, there's not going to be any coverage.
And I know it's hard for folks to believe it, but insurance companies do have hearts out there, and we're seeing a lot of them that are very flexible and more open to somewhat morphing to the clients. And gee, we understand you didn't really know you had to tell us about your new dog. So they do have hearts out there, and the underwriters can review it.
And there are some insurance companies out there that will literally bend over backwards for their own insurance.
Yes.
They want to. They understand that the insureds may not be insurance savvy, that they don't know what this particular clause in the policy means.
I don't. That's why I have you guys on the
That's
show.
why, that's why
I
we're
don't.
here. That's
I mean,
why we're here.
I can dissect a contract
Sure,
away every which
sure.
way but sideways and explain that to anybody in the most lay of terms. But when it comes to other fields, I mean, I can tell you basic stuff, like
Sure.
you want to make sure you have replacement, right? That's something we talk about. We just kind of dabble on that. We mention, hey, definitely talk to your insurance agent about replacement costs,
Sure.
because you want to make sure if you get robbed or you have a fire or you have some type of catastrophic loss, that you can go in and replace the things you had in your home without such
Exactly.
severe depreciation that you can't buy what you had.
Exactly.
And if it were up to me, everybody would have mandatory replacement costs, because it's so difficult sometimes to explain to people what betterment is. They don't seem to understand why you only pay me half. It's going to cost me twice as much to replace that item, and you have to explain to them, yes, but it wasn't new when this loss occurred.
Right.
I can't buy you a used one, so I got to pay you for the new one, but I got to apply betterment or depreciation to bring it down to its value.
Speaking about replacement, this is a question for you, Paula. If you have, I mean, you're talking about, they didn't didn't have replacement, so now you're depreciating it. How much does that change in their policy? Because it's not really that much, is it?
It can be, depending on the carrier. In some cases, you can have a homeowner policy without replacement cost on your contents. We're talking about contents and personal belongings. You add that replacement cost coverage on your contents. It might be $100, maybe $700. It can depend on the overall premium.
Is it kind of a general
home.
percentage that you see generally?
Not generally, to be awesome. I can't really state to that. But another thing I'd like to bring up is that with your homeowner coverage on the dwelling on your building, there is a built-in coverage on most policies they call ordinance and law, where they'll give you 25% over and above the amount of your dwelling coverage to help you rebuild your house. So you might not realize that. That's not easy to see sometimes even on the application or the paperwork, but it's built in. So if you have your home insured for $200,000, it burns to the ground, you might have 25% building ordinance along. When you rebuild your house to current code, they'll give you 25% over and above that $200,000.
Well, current codes and values change, and
yes, changes daily, and it depends on your city and township and county and whatnot. But in most homeowner policies, that is built in. I think that's kind of a cool coverage. It's helped a lot of our clients. That's really prevalent for our folks here on the coastline, on the beaches. They might be in a 1950s house that's built on a slab. It burns down. They've got to rebuild. 12 feet up high. It's much more building cost, so it's really prevalent in some of those areas.
I mean, I guess eventually at some point the flood mess, will work itself out with enough natural or, other disasters. But man, that flood's
mess, been crazy. Oh, but I'll tell you a good thing.
We had one homeowner's quote. I think did I tell you this in Hernando Beach? It was like, it was more than the mortgage payment. And this was
for
not
the flood policy.
Yeah, this was not a big house. It was like $35,000 a year.
Hey, so here's the good news for you. Agents like myself, we have private flood companies available that are killing against the regular FEMA rates. So we've got people down into $700, $800, $1,000 if they might have been at $15,000 with FEMA. So there are private companies out there now.
Thank God. And that's some of the things that I know Florida Realtors lobbies for, is to bring a lot of those current, those small and private carriers back into the market because they're needed.
That has been a huge issue. And some folks too, you might be out here in Hillsborough County or out in the country and you don't even think you're in a flood zone, but you don't really realize there might be a lake a couple blocks away, throws you into a flood zone.
It's not even lake, it's just your base flood elevation. Like anything that is, it could be even how the property was built, like
correct.
How high.
That is correct.
So it's not just how close or far you are from water, because we're right on the water and we're not even in a flood zone.
Exactly. And FEMA right now is remapping all of Hillsborough and Pinellas counties for our local listeners. So we are being remapped. We'll look for the new zones that come out in 2016 or 2017. So folks now that might be in a good zone, their flood insurance is preferred. They might only be paying $300-$400 a year. They could be subject to change to a risky zone, and we'll wait and see how that plays out. There is more to come with FEMA on the table.
With the bigger waters?
Yes, Bigger Waters was pretty much reversed, but it's still being looked at. There's going to be more changes forthcoming. With the private insurance carriers, they're very easy to work with, and the rates right now are just saving people. I've got literally clients that are crying. They're so happy because it saved them and kept them in their house. For a lot of the seniors and folks that are on fixed income. So the private markets have been truly helpful. There are more to come in Florida. More companies are filing to do private flood insurance, so it is something for our folks to look at.
And I feel lucky because where I live, I'm in one of the highest spots in Pinellas County. So I always tell people.
Yeah, that's what everybody tells me when I do their insurance. I'm in the highest spot.
Yeah, and so if I got to worry about a flood in my neighborhood, I don't need insurance. I need somebody to start building an ark.
That's funny.
Well, can I speak on that for a minute too? Folks might not realize, let's say the water can come up into your house maybe a couple of inches. In a lot of cases, that might start a fire with the breaker box and the wires. If that fire were to burn down your house, they go back and consider that a flood claim because the peril that started the fire was a flood. So if you don't have flood insurance, you might not be covered.
That's crazy scary. So they're looking at the culprit.
They're looking at the peril. That's a fancy insurance term. It means what caused this claim? Oh my God, it was the water. Got to have flood coverage.
Just call it cause and origin.
Mm-hmm.
So even if most of the damage was by fire or smoke or whatever, they don't care. It's based on how
it was started by the flood. Yep. If the rising water started it. And also when we talk about flood for insurance, it's rising tidal waters. If your pipe breaks in the wall and you get some water in the kitchen, that's not rising tidal water.
Right.
So we don't consider that a flood. Just for an example.
But rising water.
Rising water. If you live in the older neighborhoods, some of our neighborhoods here will flood in a heavy rain. Like today in July, you get those heavy rains, your street might flood. If that would come up into your house, they consider that a flood as the rising waters. I encourage, though, with all our realtors out there, maybe folks home shopping, Always check the flood zone of the house before you make an offer, so you'll know up front, is it in a flood zone or not. Some things are just kind of tricky. You'd never think it's in a flood zone, and it is. So
Yes.
check that out. We work with a lot of realtors with that.
Yeah, we have some back end mapping software it's pretty spot on. I mean, it's not
Good.
it's not a the
An elevation
lenders
or-
the elevation certificate, but the lenders are actually going to pull the flood cert, and that's going
Sure.
to determine
Sure,
exactly if they want it or
exactly.
not.
Exactly.
You had mentioned something on the break before we brought you guys into the last segment, and some new law changes with respect to gun owners.
Oh, yes, yes.
With somebody like me, it's it's a sensitive topic because myself and a bunch of girls, we all recently got together and took our concealed weapons permit class. And
congratulations.
people like me, and one of my friends, commercial real estate agent, she's in a big empty commercial building by herself.
Wow.
And so,
Sure.
that can get a little bit scary if you're by
Sure.
yourself, and you want to hopefully just have to have it to protect yourself if God forbid you ever need it, but hopefully you never have to use it, right?
Exactly. Exactly.
So what are the new laws with regards to gun owners?
Just passed specifically for the state of Florida that an insurance carrier could not discriminate against you as a gun owner. Hypothetically, a company could have said, oh gosh, she's just like a bad dog. Do you own a gun? Oh, sorry, we won't write your policy. But they did just pass a law recently. So
was
wanted
that
to
a
share
question on the application before?
It hadn't been before, but it was coming into the forefront now with some changes.
So now they're saying, no, you can't do that. It's discrimination.
In the state of Florida, yeah. It might be different in other states. And
Right.
the laws do vary from state to state as people move and buy homes in other states.
Right. So we get asked all the time about life insurance, and there are so many different policies, and I think people can possibly even have a different opinion. But I was hoping for our insurance tip of the day today, Paula, you could talk about some of the differences in life insurance.
Oh, sure. That's another great question. We hear that from our clients all day long. There's basically two types of life insurance, just to kind of make it simple for our listeners out there. There's term policies, and then there's what we call whole life or universal policies. The big difference is in a term policy, that's one of those ones that might be $19 a month, let's say. When you pay your premium monthly, it doesn't collect any cash value. It pays your premium, and it gets you your benefits that are afforded to you, but doesn't save any money. You can take your life insurance and convert it into what we call a whole or universal life. That not only gets you your benefits of your, let's say if you had a $300,000 policy, but it will start saving cash value for you. So as you get older and retire, you'll have some money set aside in the pot through your life insurance. And there are some great tax incentives because it's considered life insurance. So not only do you get a benefit if God forbid something happens, you save money, you get some great tax advantages. So there's two very simple ways to get your life insurance. You can get the term policy, very, very inexpensive, or get the whole or universal life where you do save some cash. You can even package them together and have a little bit of a term policy and a little bit of a whole life. That's what I actually do because it gets me my biggest benefit there. Some policies can also give you disability because most of us will have a propensity to be disabled at an early age prior to us getting older. So disability is a huge factor because you do miss out on your income. The biggest thing we can lose is our income. So some can factor in a disability. Some actually give you what they call a guaranteed renewability. That means no matter what happens, they're going to renew that life policy. You could have a heart attack or be very, very ill, but you're guaranteed to have that policy renew for you. And that's very inexpensive to add onto your policy, sometimes $1 a month to get that feature on there. So talk to your agent or give us a call. We'll review that with you, but instead of buying pizza this weekend, go ahead and get a life policy and protect your family. We know you love them.
You know, it's funny, Paula, I'll share myself because we have a couple different life insurance policies. And when the market changed a lot, we obviously had to cut expenses. So I had a life insurance policy that actually built a cash value. And I wasn't able to pay that premium for a couple years, and the premium paid for itself.
Yes, yes. Isn't that a great feature? Did you love that? That's built in as well.
Well, I didn't know that. So the interesting part, and this is where somebody like me can share light on that kind of stuff because we don't know that. You know that. But these are the surprises surprising things that we kind of wander up against sometimes.
Sure. So what that feature does for you is, in your case, let's say the premiums were just a little bit off the budget, so it went ahead and paid the premiums itself. It's an awesome feature, and that will help you. Many policies have that built in for an extended piece of time. Sometimes it depends on how long you've had the policy and how much premium you've paid into it. There can be different levels that they can give back to you to help you pay. But that is a great feature. A lot of our folks actually use that. You can actually, in some of the policies, when you're getting cash, get a loan against yourself too if you need the money as well. So you're just borrowing from yourself in effect, but that's available. It's another great feature.
Well, you're listening to Tampa Home Talk. I want to give out our off-air number, which is 813-377-2775. Again, 813-377-2775, where if you have questions for our guests, just because we're not on air, we would love to connect you with them. So again, call us or text us at that off-air number, 813-377-2775. We're also very proud to announce that we have a Financial Peace University coming up in our office next Saturday. So July 26th, 10:30 a.m. to about noon. 9 consecutive Saturdays, we are going to give your money a total money makeover and think about how the way you spend your money and just basically revamp all of that.
Sure, and how a good agent can help you with your homeowner and flood coverage. You can review your policy and somewhat alter your coverages. You can bring your premiums down, folks, if you look at changing some of your coverages. If you feel that you've got the risk tolerance to say, yeah, I can use a high deductible, go for it. Raise your rates. That might help you put some cash in your pocket.
That's right. Save that money and pay a little bit less to the insurance company.
Yes.
Again, Katrina Madewell on the Real Estate Radio Network on Tampa Home Talk today. Thank you so much, my guests, for joining us. We're going to continue this conversation when we come back after the break, and we also will have our continuation on Saturday. 813-377-2775. That's our off-air number. For now, we're going to take a break. We'll be back shortly. Welcome back. You're listening to Tampa Home Talk on the Real Estate Radio Network. I'm your host, Katrina Madewell. We have had so much fun today in studio. We have our last segment of the day. We're talking about a little bit spin on what we normally discuss, commercial insurance and how it works if you have to have a loss, talking about our claims adjuster, our insurance people, but now we're going to share and have a little bit of fun. So we have Rick Roman with Gulf Coast Underwriters, Michelle Clark with Blue Team Restoration, and Brian O'Connor in with Inglemartin. Thank you. Welcome back. Thanks for hanging with me for an hour with some fun studio changes we've had this afternoon. So we were talking earlier in the show and on the break about some of the crazy, quirky, funky things that we see. And I know over 22 years, I have a few stories that I could share, but you guys are my rock stars today, so I want to hear about your stories. So you had a crazy cat story, right, Michelle?
I had a crazy cat story. A lady, we got called. We do a lot of living communities, so we had an apartment call and say that they had a lady that was in there that they were trying to get out of that had 56 cats in a small apartment. And,
this is an apartment or a condo?
An apartment.
Okay. So she smuggled the cats in, obviously.
Obviously. But it was kind of crazy because we had people chasing cats, and nobody could get in until the cats were removed, and animal control was out there, and the smell and the mess, and it was just crazy.
So how did you guys play a part? Like, what happened? Did they evict them first, or you were like in the middle of all that?
We kind of came in at the beginning while they were evicting her, but we couldn't start our work until she was out of there and the cats were gone. But there were still cats in there when we were starting to work. I mean, it was just...
What, do they have little kitties in the closet and they were just...
Well, when we went out on the claim, the first time we went out, they were running wild, so I guess they just kept coming back in there. And they couldn't catch them. There were a few that they couldn't catch. I think about 10.
So what goes into a cat claim? Obviously flooring. I mean,
the whole place had to be gutted. I mean, the smell, the damage, everything. It just it wasn't something that you could just clean up.
And so it's so the walls too, like drywall.
Absolutely, and sometimes it goes into the next units when you have something that has that kind of a a mess. It goes into the surrounding units. It doesn't just stay contained into that one.
And so the neighbors were obviously being affected by the smell, is what you're saying? And
yeah, think about
God,
it, 56 cats. Gosh.
I would not want to be on site for that one. That does not sound like a lot
I'm
of
sure there weren't 56 litter boxes.
fun. And you had a fun New Orleans story, Brian. Let's talk about
Well, mine is more of a.
what was it? Hurricane Katrina. So
Spent a lot of time down there, and this is more light flashing in front of your eyes. I was down in New Orleans probably in the first or second week while they had just finished evacuating the people out there. So the city was under a curfew, and I had a meeting early in the morning. I had left probably my hotel about 5 in the morning.
What was the curfew like at that time? Like when to when?
Well, I think it was about 7 p.m. to 7 a.m. And we were
Okay.
staying down in downtown New Orleans, and I had left at 5 in the morning to have my meeting out in an adjacent parish, and of course I got lost and without any street signs or any lights, and
Oh gosh, that must be fun.
very surreal. And I got lost, and next thing you know, a car behind me lights it up, and there's a police officer behind me, and I wasn't thinking. I got out of the car, and next thing you know, a police officer had his gun pointed at me. But so that's life flashing in front of your eyes, and just didn't realize that.
What was he after? Like, what did he want?
Well, he said, "Did you realize that there's a curfew?" I said, "Well, no, I didn't." At the time, I was here to take a look at it. I'm just an insurance guy. And he said,
Right.
"Well, you need to go back to the hotel."
And so they, I guess they're really enforcing that, huh?
He was pretty understanding afterwards, and it's part of the confusion of going to a location after a loss and the logistics of trying to get around on there.
Because they don't understand who you are or why you're there, and
Don't understand
that
who you
obviously
are.
the curfew is probably there because of the looters and
Absolutely.
the people just with. I mean, I've heard. I told you I had lunch with somebody, or this week actually, a couple days ago that had. They were from New Orleans and they were talking about a lot of the crime and corruption and that kind of stuff that was there, and how a lot of the people, like the mayor that was there, I guess he's in jail, and a lot of people they took bribes, like a lot of bribes for the cleanup and that type of stuff. So I think it's better, but
Well, it was a devastating loss, even logistically, trying to get around. You would have to go in. We'd have to get our adjusters in during the day. It would take a while because there were so many checkpoints. They do their work, and a lot of times you'd have to leave a couple hours just to get out of the town so that you could beat the curfew, and then drive an hour. Some of the guys would have to drive a couple hours to their hotel,
because there's obviously nothing there.
and all the while trying to balance your gas consumption on your car and trying to find a gas station. So there's a lot of logistical issues you need to address.
I was going to ask you something and it escaped me. I was going to ask you about the. I just had it on my tip of my tongue and now I forgot. I was going to ask you something with regards to that. Oh, the streets. I was going to ask you, did they clear the streets for you? Like, did the county or the city go in and clear the streets so you guys could get around, or was that another whole hiccup in itself?
Yeah, that was kind of a whole hiccup in itself, and little by little it kind of opened up, and things got back to the new normal down there.
It sure took a while, I know. We can destroy in a few minutes or a few days, can take years to rebuild. Rick, what about you? Because you've been doing this for a while, right?
Yeah, I started in 1990, so 23 years. Lightning losses, dog issues with some of our commercial clients, but across the board, there's all sorts of stories, but nothing out of the usual.
What's the lightning losses like? Like, what's that about?
Well, I think you saw in the news this week, there's 2 apartment complexes this past week in Tampa were struck by lightning and caught fire.
That's the biggest thing, right? Is that it catches the building or things around it on fire?
Catches the building on fire. We had one in Titusville where it knocked out. They had an internal cable system for all their tenants, knocked it completely out. So lightning is probably one of the top losses that we see. Top claims come in.
I think we get more. I read somewhere. I think we get more lightning damage and strikes here in our area than any place else in the country.
That's a fair assessment. A lot of your low voltage equipment, your telephones, your computers, your alarm systems. So it makes up quite a bit of our assignments that we get in the office.
Yeah, I read that somewhere. I know it was on there before. So you guys don't have anything else? That's all you have? The cat story and the New Orleans story and the lightning? That's it? You got to have something.
We have some juicy stuff on the employer practices liability side, but on the property side, it's pretty vanilla, I'd imagine.
Okay, so what are you seeing on that side?
That's like we have employers and employees getting in arguments over termination issues, harassment issues, all sorts of things. There's stories there that just go on forever.
How does that bring you into it for the insurance part of it?
Well, there's actual coverage for that. You can actually insure your business against claims, and every one of our clients actually has to sign a sheet now that we've offered them the coverage, and they're declining it because it used to be included in package policies, but it no longer is.
What's that insurance called?
It's employer practices liability insurance, and it protects the employer for any employee-employer issues, wrongful termination, sexual harassment, harassment between employee and employee, and those coverages are specifically excluded right now from general liability. You have to buy separate coverage for it.
So it covers another whole array of stuff that's not in your general trip and fall kind of liability.
That's correct. And it's important coverage. If they don't have it, they should talk to their agent about it and secure it as soon as possible. Wage and hour disputes is another one you've probably seen advertised on the radio and on TV. And the change in the law last year that took place, that it really pertains to people on salary that are working over 40 hours a week. They now have claim to funds over their 40-hour-a-week work week.
That's interesting. I know we see all kinds of quirky stuff too, and I guess at some point where there's an issue, there's an insurance product for it in the future, right? Thank you so much for joining me this week on Tampa Home Talk. We just a real quick announcement this week. We are going to be starting and kicking off the beginning of Financial Peace University in our office, and that's going to be coming up July 26th. We're going to have that starting at 10:30 in the morning, last about an hour and a half, and it's a 9-week session that will absolutely change your life. You're listening to Katrina Madewell on the Real Estate Radio Network here for Tampa Home Talk. We'll be here every Thursday and Saturday at 5 p.m. You can catch us on Twitter, Facebook, and across the web at Tampa Home Talk, and our off-air number is 813-377-2775. You can call or text 813-377-2775. Welcome back, and you're listening to Tampa Home Talk. This is your host, Katrina Madewell, on the Real Estate Radio Network. You can catch us here every Thursday and Saturday at 5 p.m. Our topic for today's show is commercial. We're talking about a commercial insurance, construction, loss, how all that works, how it plays a part in if you have to file a claim and what happens next. We have some great guests with you today. If you missed any part of today's show, please catch the show in its entirety. We'll post it on our website at tampahometalk.com. We also have all of our shows available via a podcast. And we are across the web on Facebook and Twitter at Tampa Home Talk. So thank you very much for rejoining us for today's show. Rick Roman with Gulf Coast Underwriters, Michelle Clark, Blue Team Restoration, and Brian O'Connor with Ingle Martin Adjusting. So we're having a fun conversation over the break, and we're going to get into the rest of our show. But we were talking about replacement in the last segment and how that is from the residential side, and then you were explaining how different it is on the commercial side. I wish I had chimed in, but we're gonna pick up where we left off. So what does that mean exactly? Like, what does co-insurance mean, and how can a business owner be prepared to deal with what we talked about over the break? You want to explain?
Well, as we mentioned earlier, you need to sit down with your agent and make sure that the values and the coverages that you have are correct. With commercial insurance, there's a penalty clause called co-insurance. And if you had a total loss, and for instance, if you said your building was worth $1 million, and in reality it was worth $1.8 million to replace that building, we insured it for $1 million, and there was a 20% co-insurance clause in the language of the contract. Since we're underinsuring the building.
So just break that down a little bit further. Like what exactly does that mean? 20% co-insurance clause. I don't understand that.
Okay, the 20% co-insurance clause means that the insurance company is giving you a 20% window to be wrong with the valuation of the building.
Gotcha.
You need to be within. Yeah.
That's your buffer. Is that what you're saying?
It's sort of a buffer, right, Brian?
It is. It allows
Okay.
the insured to report some lower values, provided he's within a certain range.
Okay.
To the replacement cost. It's a sharing of the loss if the values are not reported.
Gotcha. Because obviously you're insuring a certain amount. If that value is higher, it comes with a slightly higher premium.
Right. And really, at the end of the day, to avoid that, make sure you work with your agent, work with the insured to get proper values reported to the insurance company.
So continue where you were going with that, Rick.
So if we had a total loss, the building burned down to the ground, we had a hurricane, knocked it down, and we were insuring a $1.8 million building for $1 million. The insurance company is not going to replace that building in that case. They're gonna
Like at all?
How
Or
would
up
you
to $1
how would you
million?
handle that, Brian, in that case?
Well, I guess in your example, they may very well just pay the $1 million, and
Right.
the poor insured may have a building that's worth $1.8 million.
So what
you
about
get a
my
shortfall.
buffer? What about my 20% co-insurance? I'm just curious.
It just reinstates or reemphasizes the fact that you need to sit down, because so many people, they'll get their insurance renewal in the mail, they'll pay it year after year after year, and not think about, okay, what am I insuring here? What are the values of this building I'm insuring? How have materials changed, building ordinances, the cost of these goods, labor, everything, and sit down and come down with a true value. If I lost everything, what's it going to cost to rebuild it? So coinsurance won't come up at all. And another way to eliminate it as well is get an agreed value from the insurance company when you're going in. What you're saying is,
So when the policy is being written,
when you write the policy with your agent, make sure you have the best way to eliminate this coinsurance penalty is to have an agreed value. The insurance company and you are agreeing on the value. If there's a total loss, they're going to replace the building 100%.
gotcha.
And there are different ways that you could assess the value of the building. The insured may get an appraiser out there to take a look at the building, the replacement cost of the building. They may get a contractor to do the same thing.
So how often should somebody do that? Like you say, I think a lot of people, you get your renewal, you pay it, you renew it, you don't think about it. You don't think there's even any changes in there. You don't think about appreciation and value and what happens if you do have a claim, right? It's just one of those things you don't think about unless you're in that place where you've had a loss. So that's the purpose of today's show, is to, think about those things in advance and analyze what you can do to make that better if, God forbid, you have to experience it.
Yeah, I would think certainly at least once a year you should be going back and looking at what the values are, and as a commercial business, maybe look at what your fixed asset list is. Fixed asset list is going to pick up the larger assets, but oftentimes there are other smaller assets such as a desk or a table or chairs, that don't necessarily hit a fixed asset list. So I think the insured should be going through, looking at the values at least once a year, and maybe updating it. So there's not only the building values, but there's the contents values of the building, and there's also the let's say it's a restaurant. There's also the business income or the time element aspect of it. So.
So let's imagine that I'm renewing the policy on my building. It's not something I'm thinking about. Are you calling me every year for an annual review, or what should I be asking you, Rick, if you're my agent and I'm calling you because you didn't call me for an annual review? What kind of stuff should I ask you? Like, where do I start?
Well,
I just want to pay my premium and renew it. I'm not thinking about that.
Right. Most business owners are so busy running their business that they really don't want to take the time to do it. We will contact them 90 days out, ask them what has changed. Have you purchased any new equipment? Have you purchased any new locations? We've had situations where one of our insured bought a new building and forgot to tell us all about it until 6 months after their renewal, and then we find out, we have a new location, we need to add it to the policy. So 90 days out, normally we will contact the insured, find out what's changed, any new equipment, any new renovations, any additions, and then we'll also take a look at the age of the building. If the building's 2 or 3 years old, it may not be that big of a concern, but a building 25 years old, really need to look at the ordinance changes, cost of construction, everything else to make sure we have the right value of coverage on that building.
How does somebody accidentally buy another building and not have insurance? Was that a cash deal?
It's one of those situations where he's running a business, he's probably understaffed by 4 or 5 people, and just forgot about it.
Gotcha.
It happens.
Well, it's good that you're making those annual review calls so that you can check with them on that type of stuff. So, Michelle, you had just some fabulous little points over the break that you were chatting about. Like, oh, wait, pause. Yeah, let's share that. Do you want to chime in where you left off?
Yeah, it's preparation and, for the event of a loss. What our company does is, it's a service we provide to some of our clients, actually to all of our clients, but only some of them take us up on it, where we go out, and it's called a blue line agreement. We go out and we map out the whole entire building. We take pictures of the perimeter of the property. We go up on the roof. We take pictures of the roof and the air conditioning systems, all their operating systems. We sit down and talk to them about where everything is, where their important documents are being held, everything that we need to know about the property. We get floor plans.
You were mentioning, too, about where people enter and exit the building.
Right.
And I thought that was interesting. I'm trying to wrap my brain around that.
What we do is we map out a loss. if there is a loss in this building, how are we going to keep you from having more of a loss of business? So we want to know where you want us to park, so we're not, obstructing any of your parking. We want to know what doors you want us to go in and out of, so that there's still, open room for your customers to come in and out of, especially in like a hotel or a hospital. We want to be as unobtrusive as possible.
Well, I'm picturing, the example that Rick gave earlier in the show, right? It's a surgery center. You don't want contractors walking through with drywall in the front entrance where the customers are coming in. They're going, whoa, I'm having surgery here.
Right. So we want to go in the back door. We want to make sure that nobody knows we're there. And in one case, a good example is we were in a hotel. There's a huge loss in a hotel down in Aventura. I had, some adjusters that have been spending the time out there, and I told them that we were working on the hotel, and they said, we didn't even know you were there. And I said, that's best case scenario. If we're not out there and you can't see us and we're not interrupting your business,
but you're doing your job.
Then we're doing our job, We're keeping you from incurring any more loss. So we try to go in, get the job done as quickly and as efficiently as possible. And if you give us that avenue where we can go in and map out that loss before it occurs, then all you have to do is call us when the loss does occur, and we're just on it. We know exactly what we're going to do, how we're going to handle it. We've got the file ready for you. So when your adjuster comes out, you can show it to them and say, hey, here's how the building was before it happened.
So you guys are having a catastrophic plan in place.
Not just catastrophic. I mean, that can help in, even in a flood loss. If we look at the floor plan and we know where, what caused it, what caused the water damage. And we've already looked at it. We've got pictures of it. We know exactly what areas to attack. It just speeds things up quite a bit.
What are some of the major things you guys are working on? I know we mentioned water, we mentioned fire.
Mold. So
mold's another one. What are some of the other things you guys see a lot here? Like, what do you deal with day in, day out?
There's wind damage. There's, in the case of a claim that I handled with Rick was, you'd be surprised how often people drive their cars into buildings. It's very common.
I was listening to you talk about that over the break, and not to name any names, but we were there actually at that place, and my son was getting his foot x-rayed, I think, or his arm. I don't even remember. I have 3 kids. They all blend together. But I remember the building was different. Like, it had changed. I'm like, this is not, like, we were here before and it didn't look like this. And they said, oh, yeah, somebody drove their car through the building.
Happens all the time.
You would think that would be in the code, because I know, like, for residential, they made that code a while back with the hot water heater being in the garage. They made you put either like a pole or a stopper in the front so that you couldn't drive into the hot water heater. Exactly. So you would think if it happens all the time, people are driving into buildings, there would be some type of a perimeter barrier or something to keep that from happening.
And you have to remember, in Florida, we have a large elderly population. So when people start having problems with their eyes, or, they can get flustered or whatever, those kind of accidents happen.
Are you seeing a lot of this? Have you dealt with a lot of those claims too, or?
We do get some. Typically in the winter months, we get quite a few of them.
In the winter months.
Out-of-state plates.
So what other stuff do you guys see though? Like, is it all the same standard, like mold, water, fire, driving through buildings?
Well, you get a little bit of everything. That's the enjoyable part of the business.
Okay, so what's one of the wildest ones you've had this year?
Well, I don't know about this year, but I've been out with hurricanes and riots and hailstorms and just about everything. So,
like, literally in those places where people are in survival mode because nothing's open and they're looking for water and basic stuff.
And those are always big challenges, particularly down in Florida with our hurricane exposure here. Kind of unique with Michelle's firm has done quite a bit of that, and a lot of it is just logistics. How do you handle something post-loss?
Gotcha.
Getting people to the site, putting some of your vendors and contractors in hotels, finding gas.
So you put on your sheet here, we were talking about post-loss, additional living expenses, time element. You want to break some of those down?
Additional living expenses would be more on a residential claim. Mm-hmm. If the person has to be moved to a hotel, or if they have a rent a house or whatever, that ALE will kick in and cover that expense.
Does that apply for businesses too?
There's a different type of coverage. They have something similar.
What's that called in the business world? Like, where they have to, we talked about being displaced and having to work at a different place or a temporary place?
For most companies, it's called business income, or for actual loss sustained, or additional expenses for operating expenses and so forth. And it's a separate coverage that they need, another one that they need to review.
So they either don't operate, and you guys pay for that time period that they don't operate, or you pay for them to actually relocate to a different place to operate?
Well, it really depends on there. And Michelle's early example about the hotel, if you look back, most losses are not total losses. Most losses are partial losses where you may get a broken sprinkler pipe on the 9th floor of a hotel, and there's only portions of these rooms that are out of business. And, how does a contractor and the adjuster and the insured effectively work together to keep the hotel running, to make it seamless so that you don't identify the contractors doing the work?
You don't notice stuff is going on. There was a hotel that I stayed in recently, and the shower, when I tried to get out, it didn't turn off. And I felt so bad. And, we're so green. We try not to waste stuff. We recycle everything. And here I'm getting out of the shower. I'm getting ready to go to this business meeting. The shower just will not turn off. So I called down. I'm like, okay, I'm getting dressed real quick. Your shower is not turning off. And they messed with it for a while. And I had to go, and the shower was still running for a while. So it was interesting. So it's probably, imagine little things like that if eventually it just keeps running, it may create water intrusion in another room or something like that.
I'll notify Rick.
Time element, what does that mean in your world? Like how long it's going to take from beginning to end? Is that explaining it? Is it caring for that? What did you guys mean when you put time element?
Yeah, basically in a nutshell, it addresses, in Michelle's earlier hotel example, there may be some rooms that are out of service. And think about the high point in summer. A hotel may have a number of displaced residents, and there's an income stream that needs to be protected. So the insurance carrier will look at the insured's books and records and evaluate what the sales would have been had no loss occurred. So it's important to meet with the insured, get some of the financial information so that you can properly measure a loss in sales as a result of a covered loss.
No, you had on here interior drying, so that's for a flood, I would imagine, right?
Yes.
And does that happen sort of the same way in the residential world it happens as far as?
Similar, but our equipment is a little bit different. We use what they call desiccant dehumidifiers, that it dries a much larger area a lot faster versus, the kind of ones that you pull in behind you.
What is that called again?
A desiccant dehumidifier.
That's interesting. I know you guys have different terms, of course, in your world than we do in ours.
We do. It's like another language.
Yeah. And you were talking about the property damage, soft goods, dry goods, to dry clean or not to dry clean. That's an interesting one because I know that it was interesting because I've had a bunch of you guys on because it's summertime, right? And we see all these different things. And right after I had a show, one of my best friends had a house fire. She was out of town. She actually took her computer she would use for work because she had to work while she was away. Whole house, like the dishwasher caught on fire and the whole house just filled with smoke. So the fire actually put itself out, but everything in the house smelled like smoke, like everything, her clothes, everything. So I was looking at this on your list, and I never really did get a clear answer on that. And it was just interesting that you put on here to dry clean or not, because we're saying some stuff can be clean, some stuff can't. Can you get that smoke, soot, fire smell out of anything?
It depends. I mean, you're better off going to a dry cleaning company to handle most of that smoke because there's a different process in handling it. But if things aren't of any value, you don't want to spend a lot of money dry cleaning all of them. If it's better to replace them, replace them. If, you're talking about children's clothes that they're quickly going to outgrow, go ahead and replace that stuff instead of paying, because the dry cleaning is expensive for that type of a loss.
And you guys, I'm sure there's cap limits like with anything else. So you have to make sense on what you're doing. Thanks so much for joining us this week. But for now, we are out.